Well, good morning, everybody. It is October 11th, 2015. This is the weekly review, and I start off with a picture of the weekly S&P 500 big spike up last week. We thought we were going to see a rise. We definitely got the rise. I start here because, the big overlap area, the area that's going to be tough to get over is up here. It ranges from about 2043 or so up to about 2070. And so this range is going to be the tough range as this market comes back up. And on this weekly view, you have this swing point low and the one up above it that are going to be the first retest. So a bearish retest, regenerate after more than 6 bars. So that's going to be the story on the way up. Whether we spike up into that area or whether we just start to pull back here is kind of a different story, and we'll just have to play that by ear, depending on what happens. But we got the big spike up. That pretty much says that this bottom range is in effect, and that is this range here. It's a huge range, right? It's like 150 points or so. And so there's a lot of area in here to work back and forth. As a matter of fact, one could, say this area here, if we were going to get a pullback, this would be the area. In other words, you come up into this area, you pull back into here, and you try to set that ABCD structure to take you up and over this big bar and over that 2070 area. So that to me is going to be the real scenario coming forth probably this week and next. And that's what I'm going to be looking for. So let's flip back over. We started out a little bit different than usual. Didn't review the numbers. Big week up, 3.5%, 4%. NASDAQ was only 2.6. The NASDAQ was the laggard. We talk about that here in a bit. But, for the most part, big gains last week. Quick review here. Short-term bottoms in. We thought that was happening last week. I said that. I said that that's what we should be expecting, some sort of a big push. Where, if you remember, we tried to get into some of the stocks on Monday morning and actually bid higher than they closed on Friday. In particular, we were looking at the energy sector and the water. Also wanted to get into one of the technology stocks. That was the only one we got into, Palo Alto Networks. Totally missed the others, and they just skyrocketed without us, and we never got into them. That first bearish retest regenerate zone was overtaken on Monday, so let's pull that picture back up, and I'm going to go back now to the S&P 500, and if we look at it, that retest regenerate zone, remember the NDX was the only one that had gotten over it. The rest of them were going to attempt it on Monday. Well, Monday they got over it, and then they just rocked higher the rest of the week, and so just a straight push up, and now at this point, we're at an overbought level. In other words, we've come straight up 10 days, and now we're pushing highs, and we get a little doji here on Friday. It was an over-under. It's really kind of a 2-bar reversal. It's the only one. We didn't get it elsewhere, so I don't put as much weight on it when I don't see it across all the sectors or indexes or most of them, and it's just one. But it's telling us that we're overbought at this point. Many of the sectors now have transitioned trend, and a couple of indexes have done it. And so if we look at that, if I pull up the trends, we've got qualified trend here, change to sideways here on the Dow, on the Russell. And if you go down the list here, you got energy goes to bullish. You got technology sideways, bullish here. Remember, these were all bearish a week ago. And so transitions, in almost all of these on the way back up. As I've already said, we go from undervalued to overvalued in terms of price and time in a very short period of time, a couple of weeks. The short-term bottoms now are probably in place around the world. So if we look at, say, Europe, let's go and look at maybe the DAX. And let me get this out of the way and pop into the DAX here. Here we go. You can see it here on the DAX as well. So we push up off the bottom. Remember, the DAX was the one that gave us the retest on the lows. So we had this retest actually take place. It was a full retest. It actually got under, back, over, less volume. Got a little push up, pull back, and now spike up. It's already done its ABCD structure off this small one. It's in the range here, so I would expect that off of this bar it's probably going to find some trouble. But again, DAX looking pretty strong in Europe. And if we flip over, say, to maybe the Hong Kong market, you can see that it also pushed up over swing point highs. Again, test the bottom, lower volume. It actually had a little bit higher volume, if I remember right. You see 25 versus 29. No, it's 22. So a little bit higher volume, but it didn't close under it, right? Close back over it, and it gets the nice push off of it. So I think the double bottom case, that everybody is looking at, no matter which market you're glancing at, right? All of these double bottom cases have led to nice big spikes off those lows. Now the problem everywhere now is going to be the bearish retest regen. So if we look at just like Hong Kong, for example, this thing's going to come right back up into the bearish retest regenerates that are out there, and that's what it's doing already. And so on the way back up, right, if you're more than 6 bars, and almost everything is, right, that scenario says, hey, we're going to have a fairly high probability that they're going to sell this bounce into this zone. And usually if it's more than 6, it's going to be into the bottom of the zone. And that's exactly what you saw last week. Test into it, right? And now it's going to try to pull back. As a matter of fact, I hadn't looked at it, but it looks like this one actually has lower volume too on the test, slightly less volume. So all of these markets, I would expect, are going to try to pull back in the coming week, or at least that's what we should expect them to try and actually do. So if we pop back into the notes here, the other big part is, this week is all about earnings. So we've had the big push up. Now we're coming into the earnings. The meat of the earnings start this week. Financials will be this week. You got Intel, you got GE, you got Honeywell, a couple of healthcare names, I think Johnson & Johnson, a couple others. And so it's going to be, the first big week of earnings. And we've run higher into earnings. And usually that on this type of a market is going to be a sell the news setup. And so that's what I would kind of expect. Technically, the breadth broadens in most sectors. We could see that with the trend qualification charts that we looked at. So we've seen, good repair of damage that have taken place. The perception the bottom is in, technically that's a positive. And then everyone is comparing this to the 2011 scenario. Let me show you that. So here's the monthly chart on the S&P 500. And if you go back to 2007, right, this big dip back here, you come off that, right? You've got the same sort of situation. You come off big dip, right? And then you start pushing higher just like we did on this third bar back then. And so if you take and look at the actual scenario here, so big bar, eventually you hit some sort of a big bottom, get a bounce, then the third bar, just the same scenario, right? The difference this time is you didn't actually test under it like you did here. Here you actually were higher, and so that to me is the only big difference. But other than that, it looks pretty much the same, right? You come down and you start your way back up, and then from there it just kept climbing. Well, is it going to do the same this time? I don't know, and none of us really do. But yeah, this is typically what happens, right? You spike down, and then people start buying again. There are some, two big differences I see that one I just pointed out, and that is that in this case, you actually had to test. Here you didn't, right? It just kept going. And then the other big scenario to me is that, this came after about a 2-year run. Now you're 6 years into it. That's a big difference too. So, can you, 6 years into it and a lot higher, can you push higher still? I don't know that you can, but a lot of people certainly believe in it. The negatives, heavy resistance now overhead, and that's true everywhere. And the other thing that I'd point out is it's created this situation, where all these indexes are going to come into the resistance zones at about the same time. And so like the 2043 area here on the S&P, this area, that area is going to hit just about the same time that you're going to have the second retest regions, bearish ones, on the NASDAQ. For example, the NASDAQ, this was the bearish retest region here on the daily and the weekly. 4096, right? 4960. You got the same thing here, right? So I would, because the NASDAQ lagged last week, the S&P now has outran it and has set up this scenario where they both will probably test at the same time. To me, that's a negative, because now you don't have the NASDAQ NDX being able to get over those price points while the while the S&P, in other words, these are going to have a hard time getting back over this price point. Whereas the S&P is going to be hitting that heavy resistance the first time. That's a negative, right? It would have been better, more bullish, if the NDX and the NASDAQ would get over it on a weekly basis and say, hey, we are, in fact, going to transition sideways on the intermediate term time frame, and that's not going to happen now, more than likely. And so coming back to the notes here, if we just realize that everything except for the NDX NASDAQ, they're going to be performing retest regens, the bearish ones, for the first time after more than 6 bars. And that has a very high probability of getting sold. And lastly, one other thing that's not as easy to see is the volatility is still high. Whether you look at the VIX or you look at the ATRs, the volatility comparatively is still fairly high. Yeah, it's coming down, but it's still high. Usually it decreases if the market is getting more settled. The market usually goes up on less volatility, comes down on more. And so, if this volatility stays high, that's something that's pointing out that this market's, still struggling in terms of where it's going to go. Fundamentally, it's about earnings, right? They're expected to be bad. If you look at the numbers, FactSet always puts out their numbers, and they're calling for like 5.5% decline in the third quarter. Now, we know that we always lower the bar, right? So we know that that's the case, and that as a result of that, we're going to see companies, quote unquote, beat. 75% of the time they beat. So we know it's not going to be as bad as 5.5, but it's probably still going to be negative. Question is how much have they built in, they being the market, how much have they built in already into expectations of where these prices are going to be? And because they know it's going to be bad, then they discount it's going to be bad, and they know it's going to be a little bit better than bad, and so forth, right? And so the question is going to be is, do they buy them, do they sell them? We'll have to see. I don't know which one they're going to do. What I do know is that the expectations are bad in that we have run up into earnings already. So we've already discounted that. Will those earnings come out worse than expected, better than expected? And where expected is already a discounted number. So that will be the question. We'll just have to monitor them and see how they behave into it. Mostly the financial names, we talked about that to start. It starts on Tuesday morning. Tuesday through Thursday is going to be the meat of the earnings this week. You got a couple on Friday, but other than that, it's mostly Tuesday through Thursday. Intel also on Tuesday on the tech sector. Fundamental negatives, the geopolitical issues are still out there. They're a wild card in my opinion. You also have the potential for central bank action, although I think it's lesser now, but I think China will be the next one that does it again and devalues the yen at some point. Most of that economic data continues to be weak, especially in China, and we've already had that rally that we just talked about into earnings. What do I expect to watch for? Last week we were thinking that we would see the other indexes join the NDX. They should, and they did. We also expected some sort of smaller ABCD structure to form. We didn't get that. We went straight up. And so I think this week you have to expect that to happen. And then the other thing, would Europe work higher? And it did. It should, and it did. And so the bullish scenario is for a retrace that is weak. In other words, we don't come back too much. And so if we look at, say, the S&P 500, and we ask ourselves, okay, where would that be? The places that I would look in particular is here, right, to start with. And so I would use the overlap of these two bars. And then there's this gap up right back here that looks kind of interesting. And if you notice, the TA Today charts have pointed out that area as being the most likely area that people would buy. And so to me, that is the area. And so if we look at the numbers on it, right, the top of this is about 1965, the bottom of this is 1954. I think that would be the area that if we came back into that zone, that would probably make sense. And then if we take that ideal just a little bit farther and say, okay, it does that, so let's draw in the potential ABCD structure. Let's take the worst case. Then what does it do? It gets you right up into that 2070 number. And so this, to me, if you hold this high and start back up, you can hit the top of that area on that bearish retest regen when it takes place. And so that's what I'd be looking for with respect to the pullback in the most bullish scenario. Economic highlights, not a lot of it. It's going to be about earnings this week. There's some retail sales, some production numbers out of the U.S. and Europe in general, some inflation numbers. You got a little Fed speak, but other than that, not much. What's the bottom line here? Last week we were anticipating that big bounce. It did develop, and even more so than we expected. Came hard and fast. But now, it's taken us to overbought areas in a very short period of time, and you got to expect some sort of a pullback as a result of that. So I would expect us to trade down to sideways at best. How far it retraces, we just looked at. I think that's going to be the real question. What kind of scenario do we get there? And my expectation is it's going to set up some sort of a bullish ABCD structure to take us higher and take us into test those areas. Now, if we look at one other possibility, that possibility would be that this market just goes straight up. In other words, doesn't even take a break and comes straight into that retest regen. If it does this, folks, it's a straight out short. In other words, if we don't take a break and we see this thing just rock straight higher another 25, 30 points, you will see me take a short position as a result of that, because the odds of that going higher are almost nil. My expectation is that this will play out over some period of time as well. In other words, I don't think we're going to see a scenario here where this market just goes straight up and breaks or comes straight down and break. I think this whole scenario is going to play out for some period of time, and we're going to see it rock back and forth over time. Portfolio-wise, we tried to get into some stuff. We weren't able to get in what we wanted to on Monday. We eventually picked at Apple and Nike. Apple still has earnings coming out at the end of this month. Nike, Palo Alto has already reported, so I'm not as worried about trying to get out of these. Apple, I'm going to try to take my profits now that we got that push up on Friday. Zeltique trading in a range, earnings coming out on it later this month, I believe. That was something we should just keep trading. Starbucks strong. I can't say anything bad about it. The EUO trade is still there, just sitting there. It's not doing anything as we consolidate over a long period of time. And GLD, DGZ, we saw gold stocks move up violently. I suspect they're going to pull back as well. I think now is the time to get in on the short side of that again. Missed it by a penny on Friday. We'll try to do that on Monday. If you look at the short-term health, things are overbought now. And so even though all these still look strong, they're still going to struggle most likely this week. And as a result of that, I wouldn't be looking to try to buy into any of these sectors. If I look over and say, what is weak, the thing that traded weak last week, and I actually traded this in the trading room. You don't have to come into the trading room to be a day trader, because I actually do point out stuff that's longer term. I did trade some IBB stocks, Celgene, Amgen, and Gilead, and got a nice pop out of all of them and sold them out Friday morning, on first thing Friday morning. These are coming up very weakly, right, very meekly, and they're doing a terrible bounce over and under on the weekly. I think they're going to trade down again, and maybe then we're going to actually have an opportunity to buy into these, because most of these report end of the month. So, if the biotech like Celgene and those, Biogen, a bunch of them out there, some are stronger than others, but if they trade back down here and test into this and actually, get under it and back over it and have less volume than that, probably going to be a screaming buy finally. So this is a sector that we should watch in the coming week. So I think that gives you a good feel for where we're at and what we're doing. Overall, it was a big week up. I suspect that at this point, it's all going to be about earnings, and these kind of gains we're not going to see again this week. We're probably going to see some sort of a mild pullback at best, and maybe something a little bit heavier on the way back down. So that's it for this week. Thanks as always. If I can help you out, give me a holler, and I'll keep in touch as this week unfolds, and we'll see what we can do. Thanks.